gonna pop off mine too.
Welcome back to another exciting 2020 TA report. It's June 5th, Sunday. Thanks for spending your Sunday with us, or at least a little bit of your Sunday with us. It's Bags and GP and Nick, JFDI up in the place. Nick, we didn't think you were going to make it back this week, but we rearranged a little bit and we got you here.
I'm here. Yeah, I got a big race next weekend, so I'll be gone next week, but
we love it.
Yeah.
Well, we held it down for you last week. And actually, let me just twat this out since we're live on the YouTubes.
Pop on that so I can see the.
All right. So the link's out there. So we, GP and I got all bulled up last week and the last 2 weeks, kind of. And, the market just said, well, we're going to hold in place here. So looking at the S&P, it still held the majority of the gains from 2 weeks ago, but not exactly how most bulls, I think, wanted to see that resolve and follow through. But to me, it made sense to take a pause there. I mean, we were running the weekly 9. We've got this huge volume above. I don't think, my anticipation was for it to just bust straight through and go to all-time highs by the end of the month. But, it did throw a little bit of a wet blanket on, maybe some sentiment of, what we were coming off of a almost 7%, 6.5% week the following week. So GP, I'm gonna start with you. How did you see last week's action, and are you still thinking more to the upside, or are you a little cautiously optimistic after seeing last week's candle?
It's hard, right? So far, every time I say anything, the market does the exact opposite. So I'm pretty bullish here. Last week's volume was probably the lowest red side volume all year as well, I believe. I know it was a shortened week, so maybe we would have gotten a little bit more. Yeah, we probably would have gotten a little bit more, but it was the lowest volume since November 2021.
November 2022, the week of November 2022. Or sorry, yep. November 22nd, 21. Yeah.
Yeah. So the week where we kind of died, right? That was the first week where we broke out there.
And then rolled over.
Yeah, like if you go to the Q chart, it's probably more apparent. So we broke out on November 22nd week or whatever that was, and then immediately reversed course. That was that Thanksgiving meltdown, whatever that was, right? And then we tried to make a new high, rejected, and then it's been the rest is history, right? So volume was probably the lowest. I don't know if that matters anymore. I like it for the upside. Is it going to go to all-time highs? Like, it's this weird, like, people are on FinTwit or StockTwits or whatever it is, and just making these outrageous claims on oh, well, we're supposed to have all-time highs next week. And I understand it's being sarcastic and stuff like that, but, like, I don't know. It's interesting sentiment, but we held the top part of the range for the first time in a long time, right? In a couple of months.
Yep.
We held the gap down from, what was that? When we finally broke the kind of the lows from like early May.
Yep.
We held that gap down all week. We tested a bunch of times. So I think we pushed higher. There is a lot of technical damage. So I don't think I've ever said it's going to be easy when you have this much technical damage, quite the opposite. But what because it was so straight down for 8 or 9 weeks, the chances of V shape always increase because it's been straight down for 8 weeks, right? So that's one aspect of it, but there's just a lot of technical damage.
Yeah, and I think, and I'll kick it back to Nick in just a second. I think looking at where pivots are on SPY and Qs, I mean, you're exactly right. It defended off, that gap down low, where it closed. It's where my crosshairs are right now, if you can see that on SPY. It basically closed at this pivot low from February, right? So we're in a little bit of a zone, that if you're looking for upside, it had to hold that area. Right, you couldn't lose that area. Knowing that you needed to build it up. I think on the Qs, again, holding the area, but at the same time, Qs still look a little weaker to me. But Nick, when we talked to you last, you were decidedly bearish after basically calling, 290s, 285, 290 on the Qs. And then what was it? 390, 385 on SPY. You kind of changed your thesis a little bit and thought more downside. So was this how you were expecting the week?
It was interesting. Like GP and I kind of were going back and forth a little bit on stock twits, and what date was that? We basically said, let me fix my chart here.
And I appreciate that, Nick. It's when you come to our conversations, you come with data and analysis versus like, oh, we're in a downtrend, so we're just going to continue down. It's like, totally. Let's talk about the details, right? Give me some data to back up your viewpoints besides, well, the economy sucks, so the market's going to suck. And how many times have we talked about that the economies are not the markets and the markets are not the economies?
Totally. When I can't remember what date that was. It was whatever it was, but we basically talked about, that 520 bar. It took out those lows and it rallied. And then 2 days later, it tried to push through those lows again and failed. Then we had that engulfing bar on, let's see here, 525. And we saw this bounce, which the fact that we didn't push lower and even see follow through, I mean, we should have, on 518, that nasty bar, we should have seen some real follow through from that, right? And the fact that we didn't, and that 520 bar closed well off the lows, was kind of a signal that, like, hey, like, now's not the time to be pressing shorts or to get short or even to get more bearish. I'm talking the Qs too. Do you have the Qs?
Yeah, the Qs are up.
All right. We popped higher and like this, I kind of live and die by like that 50% retracement. Like that's a lot of times what I want to see get taken out and hold for me to say, okay, trend has definitely changed. And as of right now, what we did, we rallied off that kind of that lower trend line, popped, and so far we've retraced up to the 0.382. It's tough to say, like, I mean, to see the action that we got last week, especially after Thursday. Yeah, Friday was ugly, but it was below average volume too. Like it was just some slow churn. And I don't think it's out of the question to push into that 320-ish area, 325, which is the 50% retracement. Now let's say like you see the 50 DMA is downtrending. Who's to say we don't just kind of churn sideways a little bit here? And like, honestly, like what I'd want to see on the bullish side is us churn sideways and fucking gap and go right over the 50-day. Like if we got a gap and rip and got a close somewhere up above 325 on some volume, I'd be like, all right, we're off to the races. On a longer time frame, if you have that channel drawn on the weekly, that kind of downward channel, I think I've shared it before. A lot of times when these patterns develop, the measured move is to where the pattern originated. And in this instance, the pattern originated basically at highs. So if we hold here and kind of continue higher up and push into the upper end of this channel, move sideways, I don't think it's out of the question to move higher. It's just, I'm with you, GP. Like the guys, like people on stock twits and Twitter, and it's just like all these kind of like outrageous things like, yo, we're not going to zero. First of all, we're not going straight to highs tomorrow. Like, I think that it behooves a lot of people just to take it a day at a time, but at the same time, not analyze every single day's price action, because honestly, not every day matters. But if you're starting to build into positions, like you should maybe be in like starter positions, wait for the market to rally. Like we have on the Qs, we have resistance basically right where we're at that 316, 320-ish area. So we're at a spot where we should fail. Like bears want to see us fail here. If we're not going to fail here, we're definitely going to push higher. So just, build. You don't need to be all in, all out. Like you don't need to have like your entire macro, micro views figured out, but have your list of names that you want to be involved in. And again, in my opinion, continue to scan for the relative strength. I don't, it's interesting, I'm largely in a lot of energy names, and even on like the breaks higher on a lot of these energy names, we're still not getting the volume. Like USO broke out on Friday, and like it was on like half the volume that it normally sees, like on a daily basis. So I think that the market conditions overall are relatively difficult, and I think it pays more to just take it slow. Like you don't need to pick the absolute bottom. Wait for wait for your setups, really. Like a well-timed entry is going to outperform, all day, every day, I think.
You know what? I don't understand the fascination with the 200 SMA.
Yeah, for sure.
I don't really, it's like, oh, it's got to tag that. I'm like, that's fine, but in 12, 13 years, since 2010, basically the financial crisis kind of lows, breakout kind of, since then we've tagged the 200 SMA once.
I know I think it's only, I don't even know how to really say. I think it's more or less almost a lagging trend indicator.
And I love the comparisons to the .com crisis and all this stuff. Yeah, it's been miserable, don't get me wrong. And it's failure after failure after failure across the board. And you're seeing there's definitely signs, right? Sheryl Sandberg stepping down, Jeff Bezos stepping down. There's definitely overall signs, big picture, that something has shifted, because the greatest kind of business builders and fund allocators are saying goodbye to different ventures. So you have to assume that things are definitely changing, but not every, I don't understand the calls for the 60, 70, 80% moves down.
Oh God, I know.
Like it's once in almost a lifetime kind of conversation, and a lot of our businesses that are in the indices are doing pretty well. And like just look at Elon, right? 10% workforce cut, and then comes out saying, no, it's going to stay pretty flat. Like,
yeah,
like it's almost like he's trolling every every recession buff out there who can call, like, it's fantastic from just outside looking in. But like, you wanted the 200-week SMA, we got it on the composite, and no one wants to pay attention to that, right? Like, but it didn't happen on the Qs, and I just don't. I think you're seeing trend changes that are going to take some time for sure. And one thing I've noticed is when you have this kind of volume, it's not the beginning of another leg down. It's usually the end of the leg.
There's no more
Right?
sellers.
Huh?
There's no more sellers.
Yeah, that's like, take a look at if you go back and look at chart history, you'll see that volume spikes hard when it bottoms, right? Like, that's the capitulation, but the volume around that spike is also pretty heavy.
Yeah.
And usually red, and it's usually pretty bad. And then what happens? Like, we have a 10-year bull market that forms. So there's definitely stuff that can come down. I am in the camp that I think at least until elections, that 280 level, which is Biden lows, gets defended. That's 280. What's the actual low? 280.62. We undercut that on that May 20th week, and then we reversed higher immediately.
Yeah.
So I'm in the camp that they're going to continue to defend that. And I think you know what the crazy part about this whole year is, or the last 8 months, is we've spent the last 14 years or 13 years watching the markets gap and go without us, right?
Yeah.
Like, what was that stat, Bags, we were talking about? Is like 95% of the move is all like, it's all overnight session.
Yeah, all futures, right?
Yeah, and like the day it just churns. And so what we're seeing now is the futures hardly ever matter, and most of the action has been real time, right? So that's people, not you and me, but funds actively managing what's going on during the day. So it's definitely stuff that's interesting.
Well, and I've used these real world examples of how many people I've seen at stores and the housing market, since I've been very active in the housing market for the past 2 months, basically. I think what the mortgage rates are doing is actually just getting, it is definitely getting people out of the market, but people are still buying houses. I look at my watch list that I put together of, before we got our offer accepted and we're under contract on the house we're getting ready to purchase. I had another 10 homes or so. And our second place home, had we not got the one that we wanted in Atlanta, it actually they closed on Friday for $100,000 over asking price. And that tells me that when you have the right goods, like the right stock, then it's still cheap enough to buy aggressively, right? And I just think that, yeah, there's headwinds with war and supply chain issues, etc. But at the same time, people are still buying. The American consumer is still buying. And I saw some report. I think Wall Street Jesus posted savings were at like pre-pandemic lows, and I replied back with, "Well, credit. Everybody's working on credit," and sure enough, right, credit is near a high. So I think when savings are very high, that doesn't mean that everything's great. I think when people are comfortable to buy a lot of things on credit, that's a real sense of how well the consumer is doing, as opposed to depleting their savings or using their savings or having their savings invested or in other places that they decide to use credit. Then they're leveraging themselves. So I just think the boogeyman of, we're in the Great Depression 2 or Great Recession 2 is so overblown. And I get that it's some of it's hyperbole.
We've
Go
more
ahead,
or
Dave.
less kind of been in it. I mean, last year, you could argue that last year was more or less distribution.
Mhm.
And then like we've sold off a lot, most of this year, I think. Yeah, right. Like, and all that stuff, all that, like, they're not going to, when they come out and say recession, it's going to be, oh, we were in a recession. They're not going to say we're going into a recession.
A recession's called after you're in the
Yeah.
middle of it or coming out of it, right? I mean,
Yeah,
it's
totally.
not something that you're in a recession and all of a sudden, oh, we're in a recession as of yesterday. No, that's not the way that happens. Anyway, I just come back to what we were talking about in the early spring is, if you're buying companies with good earnings, they might have a quarter. I mean, Apple and Microsoft both said their quarters aren't going to be as great. Well, they've hit back to back all-time great quarters. So, I think we can give those types of companies a little bit of reprieve on what they're telling us in advance.
Also remember like what Microsoft said, right? Like we're guiding down, I think it was 2 or 3%, which is absolutely, I don't even understand why you need to release something, but okay, you felt the need to release it, you released it. Same thing with Snap. I have no clue why they're not obligated by any legal things that I see. They released it, but what did they tell you? They didn't tell you it was business. They told you it was dollar impact. It was an FX conversation, right? So what happened? Microsoft gapped down, blah, blah, blah. And then where did it finish? It finished green. So it tells you that even their business is still really strong, but because of foreign exchange, because the dollar is so strong, they're eating a little bit on the upside, which means their business is still pretty freaking strong. I think that's what I got out of that conversation. I don't know about you guys.
I didn't pay too much attention to
it. They guided down early for 2%, and they cited FX being the issue. They didn't say business has slowed down. They didn't say anything has slowed down besides they're having a negative impact
monetary, right?
Yeah, from foreign exchange issues.
Yep.
And that's why I got bought up. That's why I closed green the day, right? Like
that's right.
That's what you have.
It was down like 5 or something %, which is a big move for Microsoft.
Yeah.
Yeah. Yeah, these big names I think are going to be kind of like they're all at kind of pivotal points, like Apple, for instance. There's a lot of resistance kind of in that 150, 160-ish, 150, 155. To see those like climb back in their ranges and then kind of hold, I think is going to be pretty important, along with like, when it comes to the indexes, like those are the names that you're going to want to pay attention to. The Apple, Google, like how they behave, I think is going to be indicative of how the indexes behave. But other than that, I think it's becoming a stock picker's market, and you're going to want to be, I don't know, just my style of trading is I want to be where the relative strength is, I guess. So like solars are looking good. The energy across the board still kind of looks good. I don't even know what half these energy companies are, but from just a trading a chart perspective.
Yeah, I pointed solars out at one point last week. I was looking at First Solar, and it looks pretty good. Like it, I would be interested in that weekly right there.
JKS looks good. ENPH, SEDG, FSL. Yeah, they all look. the commodity stuff doesn't look that great though. Like, like X and CLF and I guess CLF doesn't look too bad.
No, CLF looks awful. It rejected the. I think I posted the chart.
It was a breakout failure for sure.
Yeah, and it was a full reversal, right? It wasn't like.
Yeah, it definitely didn't hold.
It didn't hold. It rejected previous resistance, and it failed the prior low. Oh no, it didn't fail the prior low.
So we got Randy and Shamsu Sai in here with us. I do want to touch on one thing when I was talking about leverage, just to make it clear. I'm not saying too much leverage. And I pointed that out to Randy in the chat. I'm not saying, because he asked me, too much leverage, isn't that a bad thing? Yeah, absolutely. What I was more meaning of, just comfort to use credit is not a bad thing, in my opinion. And then Shamsu wants any thoughts on the coming Amazon split? GP, without sounding like a broken record. Actually, that's coming up really soon, isn't it?
It's going to split as of Monday.
As of Monday.
Oh, really?
Yeah.
Yeah, that is really soon.
It will no longer be in the 2000s. It will be in the hundreds.
I think that's going to get more participation from retail more than anything. I don't think any, fund managers not in Amazon, because it was a, $2,800 stock, or at one time a $3,000 stock. But anyway, I think that'll get some more participation. I think it's going to drive up the options market a little bit more. But I think GP, you've touched on that quite a few times, that it's probably going to get some more hot money in it than what it once did.
So I think a couple of things happen, right? Basically, the split increases the float, and it's going to increase the float by 20 times. This is a stock that trades normally 2 to 5 million shares a day, right? Recently, it's been a lot, but before that was 2 to 5 million shares a day. That's a pretty low float in terms of shares, right? So when you have these big moves, it comes easier on not that much volume. But now you're going to pretty much have Apple size volume. You're going to go from 4 million to 80 million, right, in shares that are going to trade on a day-to-day basis. So it changes the entire dynamic of how the stock is going to move. Plus, they were, because it's a low float, selling premium and then watching the stock dive because of dealer convert. Like, that's basically what's been happening for two years now. Every time it gets to a resistance point, in comes these massive couple of thousand, which is a lot for Amazon. Ever since the SoftBank stuff, they've just been selling calls, and immediately the stock reverses down because it's already overweight everywhere, right? So people aren't going to buy. So you can easily find resistance, sell options against it, and see the stock die. It started on November OpEx, and it has not stopped. I think you'll get a lot less kind of that type movement, because the premiums are just not worth it anymore, right? You can sell 1 week out calls and generate $5,000 to $6,000 a week on just 100 shares, right? And a lot of these guys are holding big positions because they bought much lower. So it's easy to do. I think it's going to change the fundamental view of how it moves. You'll have to see honestly what it looks like afterwards. I think Netflix is a good example, back from 2015 when it was when it split. It kind of went sideways for a couple of years. So, and that was like a $700, $800 stock, and it split 7 to 1. And then ever since kind of the split, it just went sideways.
Yeah, that's basically.
Yeah, my TradeStation charts have all updated now already. So it
that's nearly 2 years of sideways.
Yep.
With Netflix.
So I would expect Amazon to probably be in that range. And to be real, Amazon's pretty much growing, but it's hard to grow a $500 billion company by the same 30-40%, right? Without another pandemic or something crazy.
Yeah.
So I'm holding the bag in some Amazon.
Yeah, so I added around 2100, right? So when basically it came back and retested and held. So
I joke though, right? Because I mean, obviously I was fine with buying Amazon because I'm not going to sell it for cheap, and Amazon's not going out of business. So that was just a little tongue in cheek.
yeah, absolutely. But when it came to 2100 and it held, or 2000 and it held,
yep.
It was good. It was a good time to buy.
GTG. I did put on a few longs last week, by the way.
GTG?
Good to go.
Oh. I pulled up the ticker GTG. I was like, what the F?
But I did put on a couple longs last week. It's just been really tough for me to look too far outside of my existing long individual stock positions and a few things I have on the watch list. So, I mean, I've still been adding to my XLG, which is my top 50 S&P 500. And I added to Soxel 3X there on the semiconductors.
Shall we then talk about
the gush?
AMD?
Is what you should be buying.
What's that?
You said you should be buying the gush. Is what you should be buying.
Gush.
I rather buy the drip.
Oh.
Yeah, they're gonna keep pushing it, but this is parabolic. I'll wait till it breaks, but
yeah,
it's just unreal on how much it's pushing.
The one that I'm mad about that I missed, where's it at? What's it? ERX. That's what I was looking at. And I think I can go back and check charts for charity, but it was somewhere around like 20 something bucks. I gotta look.
That was a
Randy's asking what are the prospects for small caps. I'm going to answer that for him. They're going to turn to micro caps and they're going to zero.
Pain.
I'm just joking. Prospects are IWM is just terrible to trade.
I mean, I've shit on small caps a lot in my time. And without a situation that we experienced in 2020, I think it's just going to be tough for me to see something like that in small caps happen. That doesn't mean small caps are not going to go up. We can go back from the beginning of time chart and it's up and to the right. But again, there's a lot of things added and taken out of the ETF over time, right? It doesn't just stay these same 2,000 companies. So, I mean, I think it can rebound, but I don't have a lot of faith in this, the 2,000 companies as much as I do the top 50 companies. That's just the way I look at it, Randy.
Yeah, and the monthly looks fantastic. It held the.
Yeah.
If you look back from 2009 and if you go back to 2009 bags.
2009.
Right. Grab the low and draw a trend line up from the different peaks. Are you on log or regular?
I'm always on log.
Okay, so go to regular. It's hard to.
Oh my God.
Now, if you draw the trend line, we bounce exactly from. Like if you draw the trend line from March 2009 to October 2011.
March 2009.
I can just share my chart if you want.
Yeah, let's do that instead of trying to get me to draw your chart.
All right, I want to make sure I don't share any account information, so give me a second.
January 2nd. And I'll post this.
Yeah.
Yeah, we can see it.
Are you seeing IWM here? Right, so basically that's the trend line. It's kind of broken and reclaimed many times over, except for 2020, where it broke and then did reclaim shortly afterwards. But it's where we broke out from. We came back and retested, and it's holding the 50-month. It's an indecision candle on the last month, which I like indecision candles after what it moved 244 to after a 70-point move down. What is that? That's 35% or something like that. So like, I like it. It's going to go higher, I would imagine, but I also think the markets are going to go higher. So if you're in the camp that everything's going down another 40-50%, then ignore anything I'm saying.
All right. Oh, I like your wallpaper there. Is that you, GP? Is that you?
Yeah, it's a bit
You extra sexy. I just shared my January 2nd 2 times energy sector on StockTwits. It should be good lulls for everyone. I said $39 would be, hang on. Where is it at here? XLE to 65 is my measure move. 80 is my dream. That would be 18%, 36% in ERX, so 39. Am I stupid, or does it seem like a money play? $30 leap strike for $6. Yeah, that would have been fucking money on January 2nd.
Dude, I don't even. I had Exxon at 33, so it was a 10% dividend too.
I mean, that bitch.
I just fundamentally don't believe in the story, right?
In stock price. I would have had it by the end of the week. It would have been $36 by the end of the week. Anyway.
I think the IWM looks great.
What was that, Nick?
I think the IWM looks great.
Don't take our word for it.
I agree with you.
Don't take our word for it, Randy. Just do you. If you like small caps, hey.
I mean, I'm not saying any individual names in particular, but as far as the index goes, I think it looks pretty good here.
It closed green in May.
This is not financial advice.
Right? It closed above the open in May, which I think is pretty impressive, even though it's by like 41 cents. It closes that's a hell of a tail.
Ranveer likes your wallpaper too.
Gosh, I forgot about it.
I want you to send me that actually, GP. I'm like that my work computer desktop.
If you if you bring up the IWM on the daily,
okay, and look at the 200 SMA.
It's a really pretty channel.
Pretty channel, but look at where it tested. It tested the gap up area.
Yeah, like perfectly.
Yeah,
and held.
So the November,
it's crossed over the 9 and the 21 daily too, fighting the 50, which typically is a weaker resistance than the 9 and the 21 in my experience.
And you have 821 crosses across the board, right? Like there's a lot of stuff that's setting up that we didn't just reverse higher. We based in a lot of stocks for the last 2 or 3 weeks, right? And then tried to push up higher. And there's obviously still some resistance, but it's just stuff to notice is that we didn't just V-shape out, right? Like we did in March. We based for like 2 or 3 weeks and then started to push higher.
Yeah.
Yeah.
And you've got a lot of this shit going on. And I've already gone over how much I hate chart patterns lately, but you got one of these happening. And that's a lot. The one thing I wanted to bring up was we have a lot of this 9 and 21 daily crossovers happening right now. But we're getting snuffed out on the 9 weekly. So, typically, the 5-minute leads to the 15-minute, leads to the hour, leads to the 4-hour, leads to the daily, leads to the weekly. So you have to build those trends, right? So could the weekly overpower those daily crossovers? Yeah, it could. But that's why I took some longs last week. I think that, we're probably, hopefully, seeing some upside getting ready to happen. And that's happening in a lot of charts, not just IWM.
Yeah, it's across the board. And then
Yep.
Now pull up AMD and
Yes, that's where I was going. Brother from another right here.
Right. So this I took long into last week shares, and then also added options here because this
looks incredible.
Maybe it fails. Maybe I'm happy to take this failure like a champ if it happens, because in this market, if you don't try this, what else are you going to try?
Yep, exactly. Right? This might be the best looking chart out there right now as an individual stock for a major company.
Yeah, anything over 100 billion in market cap, right? This is 170, and it looks better than NVIDIA.
Yep,
which has been our leader. So there's a seismic shift going on. Is like, here, take the keys to the car, AMD, right? Like it's something to notice. Is like, I'm not saying AMD is bad, but NVIDIA is bad, but it's noticeable that
not at all, right? And I think NVIDIA led the way for so long that AMD is now going to, I'm not going to say AMD is going to lead, but AMD might be starting the turnaround for semis. And that was one of the big reasons why I wanted in Soxel so bad last week, was because, again, we've talked about Broadcom for the past month. Broadcom still looks great. AMD, again, one of the best charts looking out there in the market. There's a handful of other just really on semi. Another one just looks fabulous. There's so many strong looking charts in the sector that I was like, all right, let's get some leverage on the semis.
And as you were talking about the weekly timeframes, right? AMD crossed over the 21 EMEA, right? On the weekly, it closed above it. So
it looks fantastic.
Yeah. So it got rejected. It got rejected like what, twice, 3 times there. And then finally on the weekly, it closed above. And Netflix actually had a green week, since you're bringing up Netflix.
Yeah. And Ranveer wanted us to talk about Netflix a little bit. I know you love talking some Netflix GP, so figured we could tackle that one for him too.
So I was really kind of annoyed with the Friday meltdown, because I'm like, why do we keep selling off on the same damn news, right? Like jobs, inflation, PAL, like this is the China trade war.
The fear is palpable.
Yeah, but we're in a low liquidity environment, so any news can be. I think that's what I've noticed is like anytime we have any kind of bad news, the market gaps down, and then like there's not a lot of selling pressure once it gaps down. It just gaps down, and then what happens is it bounces, and then in comes the degenerate zero DTE traders. Like three, like I've been talking about it on StockTwits a lot, but literally in comes the call sellers, and all of a sudden shit just accelerates, right? Like it's not like it's almost dealer positioning and not people selling. And in a low liquidity environment, especially with QT around the corner, I know it started officially on the 1st, but I think it's the 15th when it actually rolls off. Like the treasuries actually roll off, but it's just, that's kind of what I've been seeing for many months. But to go to Netflix is, I really like Netflix here. Might take some time to work out, but it is as coiled as Amazon was. If you add in the Bollinger Bands on the weekly or the monthly, I think. Look at this, man. It's 2 months outside of the Bollinger Bands, right? Like, but now if you go to the weekly.
Oh, I hit the wrong thing. Yeah.
I was like, what, you gonna start programming?
Well, I mean, I can, but I'm not.
Yeah. So it's in the 3-week, but you can stay at the regular 2 standard deviations.
Yeah.
It's like you're you tagged it a couple times. It's on the monthly, it's way extended, and it's trying to push up. So as soon as it gets over this, like, if you switch to monthly here, Bags, real quick, right? It's right at the bottom of that Bollinger Band. We take that out, that's our resistance right now. This is, to me, it's going to perform like Amazon just did.
Well, you know, I love me some RSI.
Yeah.
And all-time lows in RSI. It's never been this oversold ever.
Yeah.
So again, I said it, I don't know, a few weeks ago. If you liked it at 500 and 400, you sure as hell better like it at 200.
It put in a green week. Granted, it wasn't a lot, but it was a green week. Right? Like in the process of the market selling off and the second Armageddon coming, Netflix put in a green week.
Ranveer, GP, if you go back and listen to any one of our previous ones, he's going to say that gap fill's coming at some point. A gap fill is coming to a theater or a stay-at-home television streaming Netflix soon.
Yeah, and look, I'm long shares in Netflix. I also have August calls. I don't think it's going to be.
Hey, Nick,
overnight,
you still hate it?
Huh?
Nick, you still hate it?
It's just not my kind of trade. I don't hate it. I think Netflix is like the ultimate mind and brain programming machine, so I know it's not going nowhere. It's tough for me to. It's just not my kind of trade. That's all.
Yeah. You want some gush?
Yeah.
Gush, daddy. Yeah, Randy, back to semis real quick. You know, I do. I think that I mean, like, you look at UMC again, not a huge semiconductor. I mean, crossing over above the 9, right? So crossing over on the daily above the 9. I just think semis look ripe. I mean, I'm gonna pull up this one, and I know it's not gonna look great because it is what
looks
it is.
amazing.
Which one?
ON. It's probably
yeah, ON looks amazing. On
Yeah.
semiconductor looks amazing.
Yeah, 100%.
Yeah, amazing. Fantastic. I wish, you know, if I really wanted to get way over levered on semis, I would be adding some on hand over fist, and I would have been doing that for the past 12 months.
But you don't see this action. I think the whole point of this, we're going through these semi conversation, right? Like ON, NVIDIA, AMD. If you bring up LSCC is another one. Lattice, right? It had a massive move off that base at 10 to 85. LSCC.
Yeah.
LSCC. Yeah. Right? Like, so it had a massive move, came back in, about a 50% retrace of that move. And 4 weeks straight, it's been green. You're going to have the MACD potentially crossing here as well. So, like, there's a lot of these, not just.
Well, I mean, even if you look at NVIDIA, right? Like, this is the daily on NVIDIA. It captured and held, you know, the 9 and 21. The 9's crossing over the 21. You look at the weekly, it's doing what a lot of other charts are doing. It's failing the 9. Yeah. But with the rest of the semi complex feeling like they're heating up, do you think NVIDIA is really going to be the laggard of the group?
No. And also the things about NVIDIA here.
I'm not saying NVIDIA is necessarily going to be the price leader of the group, but
you're looking at that chart. Look at all the failures on NVIDIA. When it fails below the prior low, right? Like it on the weeklies there, since we topped out, every failure has been creating new lows. And this time we failed to break resistance, but we didn't break down, right? I think that's the difference here for me. Yeah. Is that we failed resistance, but we stayed at resistance.
Marvell, another name I'm long in, right? The 9's over the 21. Well, I mean, that looks like it wants to flag to me. Like so many.
NVIDIA is right back above the
right. Again, fell just below the 9 on the weekly. Right. And I can pull up 24 charts and semis here. But yeah, anyway.
I personally think we're going to get a gap and go tomorrow, Nick, as you were talking about, and it's going to leave people chasing because everyone's like, oh, I need more evidence. The market's all messed up. And
QCOM
yep.
it looks incredible. I mean,
yeah. The accumulation on this thing
looks great. I mean, just looks great.
And NVIDIA's back above their split price, right? It broke for 1 week, tried to break a second week, refused.
I won semi, the biggest name in any semi ETF that you go find. There you go. Global Foundries looks incredible, Randy. Global Foundries looks incredible. Wolf. I mean, I can make an argument for every one of these. Anyway, you guys know how much I love semis, and if semis are getting ready to rip face, it's hard to imagine that the rest of tech and the rest of the the stock market is going to be in the shitter. Like, it just doesn't work that way.
We also have turned from bad news being sell the news to bad news being good news. Look, Sheryl Sandberg stepped down and Facebook did what? Microsoft did their guide down, and what did it do?
I mean, others I'm having a hard time finding one that hasn't crossed over except for Intel. Like, every one of them has crossed over the 9 and 21 and are holding either the 9 or the 21, except for Intel.
I think IBM looks good. IBM.
Did you see my monthly chart? I was just looking at it.
Yeah,
No.
I think I was going through a bunch of charts last night on the twats, and I think I like that one from you, GP. I don't remember, but I saw it. Yeah, it does. It looks great. Like, again, this is, instead of failing on the weekly, like, this is already reversed higher on the weekly.
Yeah.
So
And
it looks
monthly's
fantastic.
curling up.
Yeah, it looks fantastic.
Right, and then you have a dividend to boot, right? So, like, maybe the change of CEO was
Red Hat looks fantastic. I mean, IBM looks fantastic.
It's broken out of the bull channel. It just happens to be a 14-year bull channel. But so it based from 1999 to 2010 when it finally broke out. We came back and we've been kind of building another base right at that level, and we're finally pushing above. So I don't know, maybe IBM finally gets some stuff into the cloud like Microsoft, and this is their pivotal moment. And it does what Microsoft did when it broke out from 40, right? It went from 40 to 3 something, 8x, 9x. Maybe this is IBM's time after 32 years.
You guys, I mentioned this back in our Discord chat months ago with GP. Nick, you're not in there, but you're more than welcome to join the bull market wizards. I would guess. Yeah. I said I like DELL. If the market kept selling off, DELL would be a name that I like. And they had this move prior to earnings that undercut 40.
Oh man!
And what a great buy that would have been. I think DELL looks fantastic. Look at that gap up after earnings, basically. You've got all the EMAs crossing over on the daily, but you got to look at that weekly now. I mean, gosh, oh man, like, you have reversed out of all that shit basically to retake all the key EMAs.
Yeah, holy smokes.
I can't say enough about how well I think DELL is poised from a stock perspective. Still a name I very much like, which again goes into the rest of tech, and that's IBM's old school tech. DELL isn't the newest fanciest high flyer, right? But at the same time, like, it's just solid. And we're bringing it full circle now. Is we're talking about companies who actually make stuff and make a profit, more importantly, right? As opposed to companies who are not profitable and losing the shit ton of money. And, you know, I'm not going to point out any specific companies, but I think we all know what's really been hurting for the last 6 months. And it's, you know, sure, Dell's been down, but it's not 80% off its high. Anyway.
We also talk about the new IPOs. Shall we touch on those a little bit? Because there's definitely relative strength showing up.
You know, I think with your desktop wallpaper, you like to be touched all over. So you can touch on whatever you want to.
I have quite a few, many of those. They're hilarious. My wife created them for me. So, but pull up DELL, right?
DELL.
Yeah.
Look at that weekly.
Yeah. We'll look at the daily, right? You know,
daily, weekly, like,
and then go the weekly. Yeah. And I think you mentioned DELL last week, right, GP?
Yep.
Zach and you know, our friend Blackouts, I think, and a few other people have been on the DELL train. It's hard to argue.
Well, look, Chewy too. Chewy showed that they're doing really well. Look at that earnings reaction, right? Like, that's a phenomenal candle. That's a hell of a lot of volume.
Consumer, guys. But the consumer, Chewy can't be doing well.
The only thing I say in life is to stay away from Twitter. That's the only thing I say. I was just having a conversation with my brother. Actually, he called me today about this, and I'm like, I don't care if this goes to 1,000. I don't want any part of it. For the better part of almost a decade, it's been a miserable mess. If Elon walks away, Twitter probably hits all-time lows.
Yeah.
If he comes in, your upside is to 54, but he's probably going to negotiate the price down, right?
Yep.
So what's your upside here? Not enough to give two shits about it.
Yeah, no doubt.
Hey guys,
what is the?
We're sorry, Nick. We're right at an hour. I want to be cognizant of everybody's time. I know we started a little bit later, but Nick, last thoughts as we head into the coming week. And obviously we know you still, evidently I should say, we know that you still like your energy plays, but what you got going on? What do you think's going to happen? Give us your final thoughts, sir.
I just want to see, like I said, I kind of want to see this for, like, on the spies. I want to see the 417, 420 get reclaimed. Right now I'm looking at it as like a, you know, an ABCD leg up. So basically our B point is really like that 417.20. If we take that out, I'm looking at a measured move, at least a short-term measured move, kind of back up into that, the high end of that channel, which would be kind of like the 440s.
Overnight, right? Like as soon as you get over 417, like it's going 440 immediately within the next 5 sessions.
Check the 1 minute chart. I mean, what makes me nervous is just the McClellan is still extremely overbought, and we're kind of sitting right at some resistance right here. But again, we've pushed through this resistance, and I think we should see a good tradable rally for sure. I don't see why not.
So 417 over 417, that's Nick's pivot. Over 417, you know, don't go buy a steak dinner, go all in on stonks.
Yeah. Take it a day at a time or a week at a time, you know.
Well, one thing we haven't talked at all about was the VIX. And, you know, the VIX has shown some strength in the past, but doesn't seem to be supporting itself all that great right now. Anyway, GP.
Yeah, it looks.
Go ahead, Nick. Finish
no, I don't watch the VIX too often, but
you just can't, like, with the VIX being high, it's just impossible to have the 50-60% moves down that you want, in my opinion, right? People are hedged.
Yep.
So as soon as you get those down moves, people start taking off their hedges because they get money, right?
Yeah.
From the trades. So it's this vicious circle of support, and you got to kind of go sideways to down to up to side, all that stuff. I'm personally still in the camp that in the next couple of weeks, we clear the 21s on the Qs. 20, 21 on the weekly.
Yeah, I'm with you on that on both SPY and the Qs, GP. I fully expect that level to be attacked somewhat aggressively. That doesn't mean it's going to break it aggressively, but I think we're going to see repeated attempts at it until it's finally broken to the upside.
Yeah, and we held like the 5 is curling up on the weekly, the 8 is starting to curl up on the weekly. We held the 3, right? There's some stuff that's there, so I think from here we at least push up to the 21. There's a lot of options expiring next week for OpEx, for monthly OpEx. I think it's 3.2 trillion, similar to March. If that happens, then you could see a 20% move up from here, which clears the 371 area, which would be nuts.
Yeah.
And no one would be expecting that at all.
Yeah. Hey, this is something that we don't do often, but one name from each of you that you really like heading through the rest of the month.
Oh.
Netflix. Or AMD, man. AMD. I can't hit on AMD. So
yeah, I mean, you can say, Nick, you can say, the indexes, you can whatever. I mean,
I like
VTNR. VTNR.
Yeah.
VTNR.
Little new chart.
It's an energy name. I just have a measured move up to 20, and it broke out on Friday.
Man, it looks good, man.
This is
longer term. I couldn't tell you. I'm just on a shorter time frame. I think it's pushing into $20.
Check out GASS. Very small cap, 125 million.
Oh shit! Yeah,
that's a big move.
That's a big ripper.
Go on.
That's
the
a rager. That's a weekly rager.
Yeah. And look at the volume. Look at the breakout. Like,
Jesus.
Yeah. Wow. What is it?
I don't know.
It hasn't had that much volume since 2015.
It's micro cap.
2014.
Sure. Hey, random question. What do you think on a much longer time frame? Like, what do you think of stuff like, let's say, Hood, for instance? I guess we're kind of running out of time, but
no. I'm good if you guys are good. I just don't want.
I got a few minutes, but I got to eat dinner, man. It's a little past 9 here, so.
Oh yeah, sure. Like, stuff like Hood, starting to put in kind of a base. It basically bottomed out in January. It really hasn't gone anywhere. It's basically the same price that it was in January. I think you could kind of argue that like a stage 1 base is kind of starting. It can go lower, but some of these names that are like, going into the single digits, like much longer term. I don't know. What do you guys think of Hood?
So
I guess out of curiosity.
Here, I like Hood and SOFI. I'm long SOFI. I've been long SOFI. I'll stay long SOFI. It's been wrong lately, but at the same time, I think it, from a product standpoint, Hood has the best user interface of the brokerages on your phone. Like it's the best. SOFI, you can do everything from get a mortgage to buy crypto. Sure. So that's appealing to, I think, people who want to invest and grow their money and not have to shop around with 5 or 6 different banks to do all the things that they want to do with the bank.
Yeah.
So I like their, I like the business cases. And I think here, a long-term investor can make money on both of them.
I'm long Hood at 10.20, so I'm a little underwater at the moment. I like it for the long term. They, as Bags said, and I think we've talked about before as well, right, Bags?
Yep.
Their interface is hands down one of the best. It's going to appeal to the new generation of investors, to be honest. And they're releasing products like, hey, make your make your stocks earn money for you, right? Like not dividend wise, but like loan them out, make some money. Like other brokerages might also give you that option, but they're not throwing it in your face, right? So
Yeah.
unless you know about it, it's hard to. They're also working on building out retirement products. So inherently, it's cheaper compared to its peers. It's got a bad rap. I personally think it goes much higher from here, but the time frame might be a couple of years.
Yeah, right. That's kind of
absolutely
what I'm thinking. Yeah. Okay.
Yeah, I think for the long-term patient investor, you know what you're getting into, and both Hood and Robinhood and SoFi, they're basically the killer app for finance for you, right? Like SoFi is a legit bank, and Robinhood is your full service broker. They're getting into wallets for your crypto, so there's a lot there to like down here at $9 as opposed to when it was in the 30s and 40s.
Yep, they just IPO'd really high. But for me, this is my general viewpoint in a lot of these stocks is when you have companies like Robinhood or let's say Tesla or whatever, right, that's out there that fundamentally make their peers change their
change the game.
model.
That's right.
This management might misstep, right? Like, so we can talk about Zuck in the conversation too.
Yep.
He's taken a lot of missteps, but he fundamentally changed social media. There wasn't a single person, like we had MySpace, right? And we had Friendster, we had all this stuff, but it wasn't until Facebook came into the picture that they changed how social media interactions go. And then they changed the ad model, right? Like they completely, Twitter still can't figure it out. I don't even know what Twitter's doing.
That's right. And I've given Robinhood a lot of grief over some pretty shitty business practices in the past. And
but they're all shitty. They all do shitty stuff.
Exactly. And I think
the one thing, sorry to cut you off, so like Hood, for instance, in September of 2021, there were 76 funds involved. By December, there were 260, and by March of this year, they're already up to 300.
Yeah, and if it crosses over the 500, you're looking at a long-term play, right? Like that's the normal kind of, like I think it's 450 or 500 in institutional investors is like, yeah, this is going to go up much higher. I've been bullish Hood. The only thing is Hood IPO chart does not look good as the DELL IPO chart, right? There's still work to do here, but I'm not worried, right? Like if for some reason they give us an opportunity to buy it like $5 or $6, like I'm going to be adding 100%, right? Like I'm not worried about this over time. People love to postulate on shitty business practices, but dude, 9 out of 10 days, my Thinkorswim, TD Ameritrade, Charles Schwab, whatever you want to call it, it goes down and just stops working.
Well, this is what I was getting ready to say just a second ago. I think Hood came out really poorly through all the the meme stock madness where they had to shut down AMC and GME buyers, right? And I think the way a very young CEO, and I'm not making an excuse for him, but I think the way he handled it was very poorly. And he probably recognizes that because they went and got Salesforce to help them with all of their customer relationship management. Yep. So you guys know I'm a huge Benioff fan. I think he's one of the best in the business. So, if Benioff is signing off on this guy and what they're trying to do, again, they all have, everybody has shitty business practices at some point in your lifetime. I think they can get it turned around. And again, it comes back to the product, how well everybody wants to be them in the space. There's not a better user interface to trade on that's out there right now. I've tried a dozen different brokerages.
It wasn't until Hood's interface that these companies even started pushing towards mobile applications. That's right? Like, so it wasn't until people were finding the ease of use on Robinhood and they're building on it, right? Like Facebook keeps trying to copy Snapchat stuff. It's, you know, greatness gets mimicked all the time, and that they're going through turbulence. And I don't think he handled it that poorly. I think he just had more limelight because it was Robin Hood, and it's all these young millennial kind of social media savvy investors, right?
Handling it poorly is in more of a reference to he's not seasoned and probably didn't have much, if any, PR coaching.
Right.
In doing what he did.
Okay.
Not that what he did from a business sense was poor. I think his front facing to the public piece of it was poor.
Yeah. And when they were in their liquidity crunch, what happened? Investors stepped up and said
he went and got some money, and they gave it to him.
And they gave it to him, right? So like, there's obviously people.
We're gonna go on this one. Ranveer asked, Hood better than Coin? Yes, right now I like Hood better than Coin. I still think Coin is fine, long term, but Hood is more full service, and Coin is practically, for all intents and purposes, crypto. So there you go.
Yeah, I'm in the same boat. I also like the fact that they're adding retirement to Hood.
Yep.
Which I think is huge.
Yeah,
right?
that will be huge. Yeah.
So,
all right, boys. Thanks again. Hey, everybody who's tuned in and watched, thanks. We appreciate you spending a little time with us each Sunday that we do this. So